Happy Saturday, everybody. Reventure Consulting came out and said prices are going to drop in Nashville 40%. Now, really interesting. The reason Nashville is starting to make the headlines of being overpriced is because Nashville hasn't fallen nearly as much as some of the other insane cities around Boise, Las Vegas, Austin. Nashville's been holding up relatively well. So now it's in the bullseye of the crash targets. And I'm going to talk to you about, in this video, I'm going to talk to you about what I think about those targets. Could Nashville housing drop 40%? Is Reventure right? We're going to look into it. We're going to do it from a data perspective, which he's very data driven. So I have a lot of respect for him, but I'm going to give you my perspective. We're going to do a quick Nashville update. Guys, this is going to be really great update. I'm excited because there's so much going on below the surface and we're going to have to dig down deep. It's going to be good. Let's get into the data. First things first, can house prices drop 40% from here? Will they drop 40% from here? What do I think? Well, in order to really understand this, we have to create an affordability chart. Now, what I did was I pulled this out before, but what I did was I went back to, I got Davidson County property data all the way back to the 70s. And I took Fred data, income data, and then mortgage rate data, and I just overlaid it to create an affordability chart. Towards the end of this, I'm using a little bit different data set, but we should get generally an idea of what's happening here. Now, keep in mind, affordability is not just price, okay? Things could get more affordable and prices could go up in theory, okay? And the reason why is because there's two other factors besides price that impact affordability, all right? Wages and interest rates. If price went up, but interest rates went down more, you could actually be in a more affordable place. Right now, what we're seeing is interest rates have been increasing, or they increased rapidly early last year. And so what we've seen is we went into a historic, going back 50 years, we haven't seen unaffordability like that, like we saw in the middle of 22. Well, what happened since June of 22? Well, prices here in Nashville have dropped 10%. Okay, that makes it more affordable. At the same time, wages increased last year. That makes it more affordable. So we've seen that we're actually more affordable now than we were several months ago. That being said, what would it take for the affordability chart here to get back up to that upper part of the band here, into this upper part band right here and get back into the affordable range? Well, from here, if wages continue to rise 10% over the next, let's say 18 months, and prices dropped another 10 to 20%, we could be back up into more of the affordable range. So what that means is, and this is my base case now, we've already dropped 10%, okay? I believe we'll probably drop another 10 to 20% from here, and for the median price. So the median price is around 450. It might bump up to 460, 465 this next month, but in general, from 450, we'll drop another 10 to 20%. That puts you back into the mid to upper 300s. I think that's where we're going to land, guys. I really do. Now, I know there's a lot of scenarios out there like, well, what happens if unemployment increases? And I think it will probably in June. Okay, I think we're going to start seeing unemployment really start ticking up in the last half of this year. We're going to see if that happens, wages drop. But here's the problem, guys. Here's how wages change in Middle Tennessee. Okay, there's two ways wages change. One is you're living here and you get a raise, or you move jobs and get a raise. Okay, guess what? Your wages went up in Middle Tennessee when that happens, right? But there's another way, and the other way is that someone that makes a lot of money moves here, and then guess what? Wages go up because someone who makes a lot of money moved here. Well, guys, Middle Tennessee, I spent yesterday with, I took a guy from LA. We just toured Nashville. I showed him all the different neighborhoods in Nashville. It was so much fun. But here's the takeaway from that. Okay, we've got a lot of people from California moving here. Do you know how many people live in LA? Do you know you know what the population of LA is? It's 10 million people. 10 million. Do you know what the population of Tennessee is? The state of Tennessee? The population of the state of Tennessee is 7 million people. Guys, listen to me. LA has 1.5 times the population of the entire state of Tennessee. It does not take much to move the needle if people are moving here. We've got people from LA. We've got people from California. We've got people from Michigan, New York, Europe, Mexico. I've talked to so many people all over the world that are moving here, and they're all high earners. They're all high income. They're going to move wages up. So even if there is unemployment, Nashville, from a relative perspective, is going to do better than other areas. I only see 10 to 20% drop from here. That's my personal opinion. Obviously, I can be wrong. And you say some of the other things, like what if there's a foreclosure crisis? Okay, let's talk about foreclosure crisis for a second. If there's a foreclosure crisis, it's not coming in 23. It could be in 24. You get unemployment, it skyrockets by June, July, August, September. People run out of savings. Q4, they start missing payments on their mortgages. By Q1 of next year, maybe there's some defaults and foreclosures proceedings start. Then you get to Q1, Q2, you could see foreclosures. Okay. So is that a scenario? Yes. However, here's the problem with that scenario. One, it is not nearly as bad as the commercial foreclosures that are going to happen. Commercial real estate is a disaster. So before we get residential foreclosures, we're going to have commercial. I personally think if there's a foreclosure crisis like what happened in 2008, they will not let people lose their homes like they did in 2008. I think if there's a foreclosure crisis, there will be massive money printing, there will be major debt relief, and people will get to keep their houses. That's my personal opinion. And to be honest with you guys, it really, the fact that we're talking about money printers tells you how hard it is to forecast, because it's really contingent upon what money they print and who they give it to. Okay. There's no way to forecast that. I guess there is. You can bet on what the Fed's going to do. But my point is it's just highly uncertain. Okay. It's highly uncertain. But from here, do I see 10 to 20%? Yes, I do. Now, let's take a look at some things that are happening under the surface here in Nashville. It is wild. And we've talked about this a little bit. The reason I talk about Davidson Williamson, and these are dichotomies of the entire Nashville market. So keep in mind that this is not just exclusive to Williamson, but this is happening in Middle Tennessee. The reason I'm using Davidson Williamson is because I have a full year of data in Davidson Williamson. I've been taking snapshots of Davidson Williamson since February of last year. So now I have year-over-year data. So I am going to focus more on Davidson Williamson. That's why. Okay, so we look at Williamson active listings. They've been going up week over week. And when I saw this, I was like, woo, here we go. It's over. I was so excited. But then I started looking for listings. I'm like, there's nothing here. How are listings going up and there's nothing available in the 600 range? And the truth is because listings are going up, but the problem is they're almost exclusively going up in the million plus active listings. Now, this is what I'm going to post on LinkedIn. The ratio of active listings to the contract volume to get months of supply. Now, I use contract volume instead of closed volume because, guys, closed volume doesn't even tell you anything in this market. It's changing so rapidly. Using closed volume is almost doing a disservice. You're getting antiquated data. It's not going to inform you. But when we use contract, we can see the active months of supply with current contract demand. And you can see the million plus price band skyrocketed, almost 30, 40, 50% here. Went from 2.89 to 4 months supply. At the same time, under 700, flat, completely flat. This is wild. So you're experiencing a very tight supply for a significant percentage of people buying in Williamson County, while the million plus range is getting more and more and more and more. Okay, let's go back. Let's look at what months of supply looks like for the entire year. So now I can go back 12 months here. Since February of 22, we can see that blue line. Man, look, November, December were fantastic times to buy a million plus house because you have so much room to negotiate. There's so much supply relative to contract demand. People are probably feeling like, in fact, I saw this a lot of listings just shut down because million plus people, a lot of times they don't have to sell and they'll just cancel their listing and wait. And I've seen a lot of those come back online. Nonetheless, here we are at 4 month supply. I can see this going up in the next 90 days. I can see this going back up above 6. Okay. So if this trend continues, it'll go up. Look at this though. Now we're starting to see 700 spike. Why are the 700 to a million spiking? Probably because there's $1 million listings now falling below $1 million. And so now we're starting to see the 700 to a million range spike. But guess what's not spiking, guys? And I hate to break this news to you, but what's not spiking is the 0 to 700. Listen, The lower tiered price bands are getting crowded because people can't afford higher prices. And so what we're going to see, I believe, over the next 90 days is price compression. We're going to see $1 million listings drop, and we're going to see lower prices go up. We're going to see them go up. So what does that mean for median sales price? It means median sales price may not move a whole lot, but we're still going to see massive devaluation in a lot of neighborhoods. Okay, so if you live in $1 million neighborhood, you will see, $1 million house maybe goes for 900. Okay, that's a 10% drop in comps. Okay, it's scary. Guess what that does to median price? Absolutely nothing. It doesn't change median price. If $1 million price goes to 900, it doesn't change the median price of 450 here in Middle Tennessee. Now, could it have a cascade effect? Now the 900 goes to 800. Now the 800 goes to 700. Yes. The problem is there's such a tight supply below that 700 range. So that being said, there are still some deals out here. So this listing right here, it's 485. Now I'm going to tell you, it is pretty far out there. This is off of 840. It's in a new build neighborhood. So this person cannot raise their price because there's a price ceiling right now. Until all those new builds get sold, there's a price ceiling. So they're not able to raise their price. They're at 485, which is lower than what the new builds are going for. The new builds are going for 500. Okay, so here you have a 4-bed, 2.5 bath house at 485. Now, what makes this a good deal? If you have all of those new builds, guys, you can assume this loan. And this loan is going for 3.75%. It's assumable loan. And the balance is about 450. So you can put $35,000 down on this house, assume a loan at 450 at a 3.75% mortgage rate, and you can get this house. Now, you can say, well, what's an assumable loan worth? If long duration bonds, 30-year bonds have dropped 30% in value, okay, guess what that means? That means this mortgage has dropped 30% in value. And now I did this. I asked ChatGPT, and then I asked one of my smart friends, and I looked at it myself. We did this 100 different ways. Bottom line is when you can assume a loan at 4% or 3.5%, you're getting about a 30% discount on the value of that loan. Okay, so a 460, I mean, it's $100,000 less. It's essentially like you're getting this house for 385. Okay, if you want to live out here, if you want a 4-bed, 2.5 bath. Now I'll tell you, I did the map. Here's the problem with this. Okay, there's a couple of problems. One, this is about 45 minutes from downtown Nashville. You got to take 840. It just takes a long time. It's kind of out there. Okay, but if you want to be out there, it's a good deal. It's a good deal. If you want this, like, reach out to me. I would love to help craft this deal for you. And I know this person would love to sell this house. I've actually reached out to the listing agent. She's an owner agent. She's trying to get out. She's moving, and there's huge opportunity here. I'm just telling you. So let me know if you want to do this, and we'll talk. Thank you so much for watching. I just want to say thank you to my audience. You guys have been fantastic, and we're going to continue doing data-driven videos. I'm going to start doing more investor-driven videos as well. So stay tuned for that. And I look forward to seeing you next Saturday. Have a great weekend.